All right, let's talk about annual reports. I know, just the words can sound a little, well, boring. But I promise you, buried in the numbers and the jargon of this particular report is a really cool story. It's about how Singapore's economy works, how big money moves, and how a simple investment idea can lead to massive results. Today, we're cracking open the 2025 report for the Amova Singapore STI ETF. It's basically a one-stop shop for investing in Singapore's top companies. We're going to see how it did and, more importantly, why it did what it did. So let's get right into it. Usually we'd start with a bunch of definitions. What's an ETF? What's an index? But not today. We're going to skip all that and go straight to the punchline. The one number that everybody from seasoned pros to brand new investors flips to first, the bottom line. And there it is, over 181 million Singapore dollars. Just take that in for a second. That's the total profit this one fund made for its investors in a single year. This isn't sales or revenue. This is the pure bottom line return after everything is said and done. It's a huge number made up of all the cash dividends paid out, plus the increase in value of the stocks it owns. So that's the big question, right? How on earth does that happen? Was it some genius stock picking, a super secret trading strategy? Well, the answer is actually a lot simpler and I think a lot more interesting. To understand this massive return, we first have to understand what this fund actually is.
Okay, so let's get down to basics. We need to understand the fund's DNA because its core strategy is the key that unlocks this whole story. So this is an exchange-traded fund, or ETF, and it has one very simple job, to be a copycat. Its goal is to perfectly mirror the performance of the Straits Times Index, the STI. Just think of the STI as the report card for Singapore's stock market. It's made up of the 30 biggest and most important companies. So this fund's only job is to move exactly like that report card. And this right here is the most important part. The people running this fund aren't trying to be clever. They're not hunting for hidden gems or making big bets. They're not trying to beat the market. Their entire job is to be the market. They just buy the 30 companies in the index in the exact same proportions and hold on. It's as simple as that. So how'd they do? I mean, look at how close those numbers are. The fund returned just under 25%, and the index it copies returned just over 25%. That tiny little gap, that's basically just the fund's operating costs, which are super low. This is proof that the fund did its job perfectly. It succeeded for one simple reason. The Singapore market had a fantastic year. Okay, so we know the mission, be the market. And we know the market did great. Now let's dig a little deeper and break down that massive $181 million number to see exactly where the money came from. First, just to put this in perspective, 2025 wasn't just a good year. It was an absolutely explosive year. The fund's return nearly tripled what it was in 2024. That's not just steady progress, that is a rocket ship. It tells you something big happened in the Singaporean market last year.
Well, a jump that big really comes from two places. First, there's cold, hard cash paid out by the companies, and second, there's the rising value of the stocks themselves. The report tells us exactly which one did all the heavy lifting. So you've got your two buckets of profit. The first is net income, almost $43 million. You can think of this as cash in hand, mostly from dividends. But look at the second bucket, net gains. This is the change in the price tag of the stocks. And at nearly $140 million, it's pretty clear which engine was driving this train. I mean, just look at that jump. In 2024, the value of the stocks went up by about $30 million. In 2025, it was almost $140 million. That's more than a four-fold increase. So the story of this fund's incredible year is really the story of Singapore's biggest companies becoming way, way more valuable. And that leads us to the most important question of all. We know the stocks went up, but which stocks? To really understand what happened, we need to pop the hood and see what this fund actually owns. This is where it all clicks into place. And there it is. Wow, just look at that giant blue slice. Banks and finance make up more than 57% of the entire fund. I mean, that is a massive concentration. The next biggest chunk, real estate, is barely 12%. This tells you everything you need to know. The fate of this ETF is almost completely tied to Singapore's financial sector. Seriously, this can't be said enough. Because the fund just copies the market index, and that index is dominated by banks, investing in this ETF is basically making a huge bet on Singapore's financial industry. So when that sector has a great year, like it did in 2025, the fund just soars.
And it gets even more focused when you zoom in. Just 3 companies, DBS, OCBC, and UOB, Singapore's big local banks, make up over half of the entire fund. A full quarter of your investment is in just one company, DBS. So it's not just a bet on finance in general, it's a massive bet on these 3 banks in particular.
So let's put it all together now. The fund had an amazing $181 million year. That happened because the stocks it owns shot up in value. And now we know that over half of that value comes from just 3 big bank stocks. It's that simple. 2025 was a phenomenal year for Singaporean banks, and this ETF was right there to catch the wave. Okay, so after all those charts and numbers, what's the real takeaway here? Why does any of this matter to you? Let's boil it all down. Here's the whole story of 2025 in a nutshell. The ETF had a monster year. That wasn't magic, it just copied a really strong Singapore market. And that market strength was put on steroids by the banking sector. What this ETF does is give anyone an incredibly simple way to ride the coattails of these market giants. And you get to do it for cheap, super cheap. That number, 0.24%, is what it costs to run the fund. That means for every $10,000 you invest, you're paying about $24 a year. That's it. It's the beauty of this copycat style of investing. No expensive research means the costs stay incredibly low, and more of the profit stays in your pocket. The report itself really says it best. It's for people who want to own the market, plain and simple, without the cost or complexity. But, the report also looks ahead. Management is clear that this direct link to the market is a double-edged sword. All that concentration in banking that drove this year's success, that's also a major risk if things like global interest rates start to change. And that really brings us to the final thought here. This whole report is a powerful argument for just owning the market. It makes you ask a simple question. Why try to be a hero and beat the market when you can just buy the market, especially when a few big companies are driving all the results? 2025 was a huge win for that philosophy. The big question now is, will it continue? This simple fund is a direct bet on Singapore's future, with all the opportunities and all the risks that come with it. Thanks for tuning in.